Folks, hello and welcome back to the Naren Agarwal Show. Today I want to talk to you about maximizing your personal ROI, return on investment. We as business owners, we are earning a lot of money, but how can we maximize that? How can we have multiple sources of income, etc.? Let's learn that from the expert that we have today. With me, I have today CACS fund manager, active researcher and writer on the Indian stock market. He's a geek when it comes to stocks, figures, securities, numbers. Introducing my friend is Saket Mehrotra to the show. Saket, welcome to the show, brother.
Thank you. Thanks for having me.
What's happening?
Glad to finally do this in person.
Yeah.
I think the last time we met, it was during COVID.
On Zoom.
And we recorded an episode on Zoom. Glad to be here and looking forward to interacting today.
Same here. Today I met Saket and I was welcoming him and we went for a small chat and he's like, today I closed this awesome trade, Morgan Stanley was making some shifts in his portfolio. Like, what does this teach me about it? But Saket, the central theme that what I want to speak about today is for entrepreneurs who run their own family businesses. उनके लिए what is the best way to maximize their ROI? So I want to have this conversation about ROI, return on investment. And usko maximize kaise kare? Because typically when the entrepreneur, they have two problems. One is they're not making enough money or profits. The second, they make enough profits and they don't know what to do with it, or they have only one way. So I want to get your framework of thought about how should they think about their ROI, and then we'll take a conversation forward.
Sure. So I think in terms of pecking order of people who do some things in their life, so either you can be a professional or you can be an entrepreneur. I think the first step of being an entrepreneur is that you're already in the highest risk reward bracket, right? Because if, let's say, you've started a business, you've already taken a lot of risk because there was a high chance that the business would fail. So in terms of you knowing what your risk appetite is, so let's give credit where it's due. As an entrepreneur, you've already taken a certain amount of risk which normal people would not do. So you're already probably in the top tier of people, maybe alongside a mountain climber or someone who does stunts for a living, right? In terms of risk reward, as long as, making money is concerned. Maybe you're not risking your lives that much, but you're putting a lot at stake. Now, as an entrepreneur, now the fact that you've taken so much of risk and let's say you expect a certain degree of reward, at some level, the entrepreneur will always have this bias that whatever money I make, let's say, let's talk about the entrepreneur that's making a lot of money. So they'll always be of the view that, hey, if I reinvest this money back into my business, that is where I'll get the maximum ROI or return on investment.
Correct.
Because anyway, the time that you're investing in your business, that's limited, right? So all of us have limited amount of time, something that you also discuss a lot in your reels. And how do you maximize what value you get out of your time?
Correct.
So as an entrepreneur, I'll always be biased that, okay, if I am running a shop, all my money is going to go back into that shop. And let's say if I reach a spot, how do I make this shop into two shops, right?
Correct.
So this bucket of people will always have this unique problem where they'll say that, where do I invest it again, or how do I maximize my business more?
Correct. How do I grow my business? How do I
Correct.
put the money back into the business?
Correct. And on the second part of entrepreneurs, which you said, let's say people who are not making enough money, they'll probably say that what other business can I do, right? Or, okay, if today I started a restaurant business, am I in the wrong industry? Should I, let's say, get into the textiles business?
Correct.
If I'm in textiles, am I in the wrong business? Should I get into real estate? So they'll have that problem as to which industry do I want to get into. But we are working with this assumption that we are going to talk about entrepreneurs, people who take the maximum amount of risk to make money. So from that perspective, I think somewhere, it's great if you have a great business and if by reinvesting the money back, you can still make X amount of returns. But at some level, I feel that there is a certain degree of bias to it, right? Now let's think of a scenario where, you are basically dependent on just one source of income. So let's go into a more,
like a traditional family business.
Correct.
You run the business and all that income that you generate is coming to your family. That's one source of income.
Right. So, it's again getting reliant on just one source of income. So, let's say again, if you go back to that example where you have a business which is generating enough money or which is generating enough cash, at some level, you should look at diversifying that into places which may not be related to your core business, right? And the idea lies in understanding that, okay, I'm not just dependent on one source of income, because let's say if an external shock happens, right? We've all seen and lived through COVID. So let's say someone who was running a travel agency shop and that was their bread and butter. For 2 years, they didn't have money, right? Because there was no business, because you could have been the best travel agent in the world and yet you couldn't have made money because of an external shock. Let's see what happened with airlines, right? A lot of airlines were almost looking at, 90% of them were almost looking at being bankrupt. But at the same time, people who had a certain degree of efficiency, there was capital infusion by them, by the government, here and there. But at the same time, some survived and some obviously never saw the light of the day. So from that perspective, now external shocks are not something which let's say is in your control. Just to give you a small example, back when a few years back, in fact, I think a few decades back, there was a massive crude oil crisis globally. And Asian Paints, right, which happens to be a company that's largely dependent on crude derivatives, the stock had almost hit rock bottom. Now Reliance, despite being in the oil and chemical business and they have their own business, they actually went and bought 5% of Asian Paints.
5%?
5% of the company, right? And at that point, no one wants to look at Asian Paints because, everyone's like, okay, crude so high, will people ever buy paints again or not? And today, the fact that they bought that company, 5% of that at the bottom, and today they're probably sitting at probably 50x or 60x returns on that. So I'm saying even for someone like Mukesh Ambani at some level, because he has all the resources in the world, he's into whatever business you can think of, but at the same time he was also not missing out on taking the right opportunity at the right time. So as an entrepreneur, because we've established that you know how to take risks, I'm not saying you go all out and you take unnecessary risk, but there's a way in which you can optimize risk and ensure that, hey, I'm not dependent on just one source of income. I actually go and diversify my sources of income. So that I think becomes important if we were to really look at maximizing ROI by being cognizant that we are also diversifying the risks and not just dependent on one event or one particular shop or one particular, let's say, business to generate our bread and butter.
Very interesting. So multiple sources of income, and you as a fund manager, you're analyzing business day in, day out, through the day, what decisions they are taking, etc. What, according to you, is that stage or some framework of thought process someone should have before thinking, okay, now it's time for me to look at other sources of income and not just keep reinvesting in my current business? Is that time of maturity? Is there a certain number or a certain thought process? What should that thought process be?
So I think at a very basic level, it should start with, okay, what's my requirement of cash, right? I must be living, let's say, a certain degree of lifestyle. And to support this lifestyle, I need X amount of money, right? So let's say that amount is 100 rupees. So if your business is making, let's say, 120 rupees, so you have an extra 20 rupees to play with. Now at that point, you can take a call that, okay, am I in an industry where this is the maximum I could make, right? So let's say if I have a shop on Park Street, lying somewhere in the center, and I'm selling, let's say, sarees, right? Because Park Street, we know there are like 20-30 stores that sell sarees. Now at certain level, I know this is the maximum profit pool I can achieve. So for me to generate additional income, maybe I need to open a new store in Kamak Street, or maybe I need to open a new store in another city, right?
Correct.
So at that level, you have to, make a balance between, hey, how much money do I want to make? And B, am I comfortable with this amount of risk at this point of time? If the answer to that is no, right? Because 9 out of 10 times you'll be biased that, hey, I know this business well. I know I can compete well. And sometimes, whether we like it or not, our egos also come in, right? That, hey, how can I not do it, right? I need to do it, or I can do it. And a lot of times we end up doing undiversified businesses. So we see a lot of entrepreneurs, being in Calcutta, we've seen this happen a lot. A lot of entrepreneurs, maybe they are in a business that has got nothing to do with real estate and they end up becoming developers, right?
Correct.
Some entrepreneurs, let's say they are in the real estate business, they turn out to go into some another line of business which are not related at all. But at some level, they also thought, or they also might have thought of it as some risk that they could take. But then the question becomes, how effectively can you manage that risk? So unless you're not clear about that, do not do this, right? That's like the one key message.
Diversification.
Yes.
Correct.
So that's one. And second, it's also to do with, let's say, if you don't think enough opportunities exist in your business. So this could be either the market has got saturated or the industry has got saturated, or secondly, you don't have the appetite to build it again, right? So let's say you made one store, you made two stores, you don't want to open a third store, right? You could be someone who's, let's say, running a coffee shop and you don't want to open 10 coffee stores. You don't want to be Starbucks. It's okay, right? Because you know how much you want. And at that point of time, you can think that, okay, now I have excess money, maybe let's diversify into other streams, or let's diversify into other asset classes which can generate income for us. So I'll actually go one level below this. So what happens is, when we ask this question, where should you invest your money, right? We always have this thing that let's not put it in one place. Let's not put all our eggs in one basket. Let's diversify it. Let's buy some bit of real estate. Let's buy some bit of gold. Let's put it in an FD. Let's put some into equities. Correct. But if we were to take this approach one level above, that is where it falls at how do I do it at an income level and not just at a saving level. So that's the question that we are trying to optimize for, or that's the problem that we are trying to solve for. Because whether we like it or not, we live in a VUCA world, right, as they call it, which stands for a lot of volatility,
uncertainty,
complexity, and ambiguity. So things are changing all the time.
So fast.
Yeah. I mean, for someone like Intel, which basically made chips for all computers, suddenly Intel is looking at an existential crisis because everyone's moving to AI, right? And
I was just talking to my friend who works in Intel in Portland, and he's like, making chips and optimizing chips for them, and he's like, out of nowhere, AMD and Nvidia are giving us such crazy competition that we could never imagine, like just 5-10 years ago, because of what they've been able to make. And nowadays, so many laptops don't even have the Intel inside, Intel chips.
Right. So kind of like, I mean, if you draw parallels, we've seen this happen in the tech world. Kind of like what happened with Nokia, what happened with BlackBerry, what happened with Kodak, right? So if you're not re-engineering yourself for the right, I mean, tech is a very ruthless place to be in, but we are talking about entrepreneurs who may not be in tech, right? Correct. I mean, even if you're in tech, you know where to play with or where the next 100 million or let's say the next 100 million or 10 million customers are going to come. So you optimize your business models basis that. So the only point that again comes back to this is, okay, you have this business, you have this extra cash. So you try and diversify into places which can generate income outside of your business. It could be related to your business. It could not be related to your business. That's a call that you can take. So that is something which I think entrepreneurs should strive to do. Basis.
So I think we discussed about two things. One is diversifying your income source.
Right.
Jahan se income aati hai. And two, generally avoid unrelated diversification of income source.
Right.
The second thing is, let's say one business, it gets you a lot of income. Now you have surplus income. Now where to allocate that in terms of an asset allocation? Should I reinvest it into my business or should I reinvest it into somewhere else? And there is a bias that comes into play. This business has made me money. This is the only way to go. So let's say someone becomes aware of that bias. I think I've hit the bandwidth of my business. I have enough sari shops in Calcutta, let's say, and I don't want to go to another city. Now comes the role of someone like you who can suggest and educate people. Stock market is a way. Because traditionally India, we've always thought of, and even today I meet a lot of entrepreneurs. They're like, no, stocks is not my thing. That's gambling.
Yeah.
Gold I will buy some real estate, some like hard or land. Stocks is not my thing. But internationally, I saw a survey where high net worth individuals, HNI individuals internationally, have about a 38% allocation of their money in stocks. Whereas in India, that figure is highly low. Most people are over-invested in their business or their home or their office land.
Right.
So when it comes to stocks, why should one look at stocks, number one, and then we'll ask other questions.
Sure. So I think before we get into stocks, just a small background. Correct. So when we do these global comparisons, there are three things that we need to be very cognizant of.
Correct.
First is the GDP per capita, right? So India's GDP per capita is about $2,200-$2,300 per individual. If you look at a country like US, it is north of $60,000 per capita. So obviously there's a 30x difference in your disposable income. Correct. Secondly, India is a country which is fairly young. So today, if I talk about the cohort of population that's between 18 to 10 to 25, we have the largest cohort in the world, and we are way above China also in that matter. So in 10 years, we'll have people who will be, let's say, having their first jobs, buying their first car, buying their first mobile phone. And we are looking at a country that's quite aspirational from that perspective, right? Now let's come to assets, right? When we talk about saving our money and putting it into assets, as a country, historically, India has been a big conservative saver, right? We've not taken a lot of risks. So when we talk about investments, most of the investments lie in real estate and gold. In fact, the RBI did a survey a few years back, and they had this in their report that 76 or 78% of the investments that people have, or the savings they have, that's in real estate and gold. And the 26% of investments were in financial assets. And even if you break that bucket of financial assets, you will see there's a LIC policy. There could be some statutory investments. So let's say you, for example, run a business, right? So when you pay salaries, a part of that goes into the provident fund. Part of that goes into someone's gratuity, right? So those formed a bulk of it, and the equity exposure was very low, right? And there are reasons for that. Because see, as Indians, or as human beings, we want things that we can touch and feel. So when I say that, hey, you buy X number of shares, you think it's lying somewhere, you don't know whether that's something or not. So people have often thought of this as a place where you gamble and make money, right?
Correct.
Secondly, when we talk about equities as an asset class, the way to look at equities is a way in which you can efficiently and effectively own businesses. Right? Because people think equity is a place, or the stock market is a place where you buy something at 100 and you sell it at 150, you buy something at 80, you sell it at a price above. So it's a place where you gamble. Yes, speculators form a big part of the stock market.
Correct.
But if you take an approach above, right, and you say that, okay, I, for example, have coffee every day, right? Nescafe is a brand that I consume. Is there a way I can be an owner in Nescafe, right? And the stock market allows you to do that. So the first thing is, how do you change your mentality? Yeah. And the other thing why we've also stayed a little away from stock markets historically is because, in the 90s and in 2000, there has been a lot of issues that have happened, right? So we've had things like the Harshad Mehta crisis. There's a web series on that, right? The regulation was not that tough. But today, if you talk about regulations in the Indian stock markets, they are probably a notch above what you see at global standards.
Correct.
Things like T+1 settlement, things like all shares being in demat. These are really, really, you can say country first moves, right?
Correct.
For a country like India, which is still at $2,200 GDP per capita, but our regulations are right up there with a US or a UK financial market, which are way above us, right? Or which are way developed than us. So that's part one. Part two is, a lot of these initiatives flow from the top. So today, let's say you put your money, the first financial asset any Indian household ends up owning is a LIC policy, courtesy an uncle or a relative that comes and sells it to you, right? So now what LIC does with that money is interesting. So typically any LIC policy will have this value proposition that you pay, let's say 10,000 rupees for 10 years. So you've thought you've paid 1 lakh. And on the 15th year, LIC says that I'll give you 2 lakhs back, right? So you think your money is doubling. But if you actually calculate the IRR or the return that you made, it's probably in the bucket of 6 to 7%, right? So intuitively you think that, hey, I have made my money. But
my
now
money has doubled.
Yeah.
But you don't realize the opportunity cost of having that money somewhere else in a more efficient and effective asset.
So now what happens is LIC with that money goes and buys stocks, right? So the biggest financial asset provider in the country has its exposure in stocks. Now, today, let's say the money that you're contributing to employees' provident funds, a part of the EPFO book also is now allowed to put in equities. So if you see from the top, thanks to regulatory changes, these assets which have big pools of money lying, they've started taking equity exposures, right? If you've seen for the last 10-15 years, there has been a big campaign that the government is running called Mutual Fund Sahi Hai, where they are actually educating people using Bollywood celebrities, using cricket stars to say that yes, you invest in mutual funds, but there are also risks in mutual funds, right? So it's not a get rich quick scheme.
Mutual fund investment is subject to market risk.
Correct. So now that is something which has been developing, and we see that happening. So the number of demat accounts opening has been increasing. So there is depth coming in the markets. So that's the precursor before we can talk about investing in equities, right? So now coming to investing in equities. So if you're a business owner in India, the fact that you're doing a business here means you are bullish about India. I mean, nothing is stopping you today maybe to go to Indonesia or to go to some other country and start a business. But the fact that you're here and you're building for this country, that means you see a particular opportunity in your business.
Good future in the business and the country.
Correct. And let's say that the equity markets in India is an indicator of how well the country does or how well the businesses in the country do, right? So if you have a fear that the markets will not do well, be rest assured that your business will also not do well, right? Because you cannot work in silos where your business is doing very well, but for some reason the markets are not doing that well. Sooner or later, something will catch up. Either the markets will catch up or your business will catch up. So having said that, if you know nothing about equities, but you are bullish about India, about the India story, because if you're not bullish, then obviously equities is not for you. You much rather maybe buy gold or put your money in some other country. That's like the way to think about it, right? So, I mean, the best approach you can take is to just buy the index. So, the Nifty 50, that's the index of the Indian stock markets. There are multiple ways to buy it. A simple approach could be you just buy a simple Nifty 50 ETF. It's called an exchange traded fund. It basically is a basket of 50 stocks that you can buy. You can start with as low as 500 rupees. You can go as high as you want to.
The top 50
Correct.
Companies of India, right?
Correct.
They have Tata, the Reliance.
Everything.
IT.
So you have a company like Reliance, to HDFC Bank, to Mahindra, to Coal India. There are 50 top companies. And what happens with Nifty 50 is that the index also keeps changing, right? So a few months back, Tata Consumer Products, which makes Starbucks, which makes Tata Tea, which makes salt, that got into the index, another company got out. So there are changes that keep happening. So it's also a method in which, it keeps rewarding the winners and it keeps taking out the losers from that index. So that's like the best way you can do.
I'm a big proponent of index fund investing and I do that very actively myself.
Yeah, so I mean, that's the simplest thing you can do.
Correct.
And the world of finance actually thrives on making things complex. So, it's like if I say that, hey, I can hold the year like this, I'll say, no, but you should hold it like this. And that is where, a lot of intermediaries come in because they want to say that they are here to change your world and make things simpler. And in that process, take home their takes, right? So I think with changing awareness among people, because people want to be aware and people know what they are getting into, that's number one. And number two, based on what these changes that we are seeing flowing from the top, a lot of this disinformation is getting dispelled, right? So people are asking that, hey, if I'm buying this, what is the underlying of this, right? What's an expense ratio? So 5 years back, if people were skeptical whether they should invest their money or not, today they are talking about costs, right? So if I'm buying this ETF, what's the cost involved? If I'm buying this policy, what's your commission, right? So people are asking these hard questions. And that in a lot of ways, thanks to the internet, thanks to a lot of the resources that are available, a lot of this, misinformation is getting dispelled. So from that perspective, I think the simplest way for you to participate in the equity markets is to buy an index. But obviously, if you're someone who has access, you can engage a wealth manager, you can engage with a PMS, you can buy a mutual fund. There are multiple ways to do it. But don't forget to ask these questions. What am I buying? What are the risks? So before you fantasize about the returns, because everyone will come and tell you that, hey, if you invest in this, your money can double, your money can triple. But ask about the risks. I think once you start doing that, that's when you know what you're getting into. Because you should know what the worst case scenario is, or you should have a sense of what the worst case scenario is. Because at that point, you don't want to be in a situation where you suddenly say, why did this happen? Because it can happen and things may not be in your control. So if I just talk about returns, the Nifty has been in our country for almost 26, 27 years now. Before that, the Sensex was there. So in this time frame, it has given an average return of 13 to 14% with a standard deviation of almost 40%, which means that there were years where the Nifty did 55% returns. There were years where the Nifty also did minus 40% returns. Right. But if you truly were invested in it for 5 years, 10 years, 20 years, over the long term, you would have been able to make returns.
So 13 to 14%, and in an FD, we assume on average 6% milta hai.
Right.
So if you're invested for the long run, which you might be even in your business, Nifty would be a good option for you, right? And if you tell me if this is the correct approach, but if let's say I'm running a business and I realize my return on investment on my business is like 10%, 11%, मेरा business काफी mature हो गया है, then that excess money that I'm generating could be essentially put into the Nifty to own chunks of other businesses and generate an income where I don't have to put in my headache, माथा पच्ची जिसको हम बोलते हैं इंडिया में, in my business and expansion of it.
Right. So the first thing, like to answer your first question on FD versus Nifty, I think we also have to be cognizant of the fact that the 13% return is not an assured return.
Correct.
So I could be entering
return.
Correct.
And it's volatile.
Correct. So I could be entering in the Nifty today, and maybe for 4 years the Nifty doesn't move, right? And what will end up happening is I'll just start hating the Nifty, right?
Correct.
So I think knowing that in an FD you get the privilege,
certainty and surety.
you get the privilege of liquidity. So let's say if you put 100 rupees in FD, if I want my 100 rupees in the next 1 second, I can press a button and get it in my account.
Correct.
But that could not be the case. That may not be the case with Nifty because I can only sell it in market hours.
Yep.
I will probably have to sell it at whatever price it quotes at, right?
Correct.
So there could be a scenario that I bought the Nifty today. Tomorrow Russia attacks Ukraine and the Nifty falls 30%. And I need that money, so I only get $70 back.
Correct.
So knowing that is important. What are you putting your money for? Is it for expenses that I want to incur in the next 6 months? Then obviously the FD is the best place to put it and not the Nifty. But yes, if you don't need that money for 20 years, maybe it's a great place to put your money. So that's fun. Second is, as an entrepreneur, when you're setting up your factory or when you're setting up your shop, you will spend a lot of time to look at what the location is. Are there any issues here and there? Are there taxes paid? Is someone from the government going to come and ask me questions? You will make all this assessment. You'll spend a lot of time to understand that. But when it comes to investing, it's not about, okay, this is giving me X% return, so I'll just go and buy it.
अरे उसका खबर आया है भाई, ये बहुत उठने वाला है.
Right. So at some level, if you just even put 10% of the effort that you put in doing your research, I think you'll be way better off in terms of your outcomes. So as I said, like buying the index is like the best thing you can do. But you could be an entrepreneur who likes taking risks, right? You could be, let's say, in the sari business. So you probably know how a Manyavar does things so well, which let's say a ABFRL or some other companies don't do. So maybe for you, knowing things about Manyavar will have an edge versus, let's say, what you and I know about Manyavar, right? So at that point for you, maybe buying the Nifty is not a great place because it may not just excite you at all, right? So that is something that you should try and do your homework on, even if it requires some amount of time, because you have to invest some time. It can't be that you just go by someone's wisdom, because you also have to know, what you are getting at. So that is important. And yes, from a return perspective, I think a lot of times things just don't go by spreadsheets. So you also have to see intuitively whether you're comfortable doing this. So for example, if I tell you, Naren, Zomato is a great investment, right? You and I have used Zomato. You and I have seen the pain of going and getting food and also ordering in. But let's say your niece, who's just like started using a phone, he would not know the pain of how, if he had to eat food, we actually had to plan and go to that location, buy it and then get it, right? So maybe he'll just think that it's another tech stock. But for us, we know that, okay, it's really solved a problem. So it also depends on different income, different age brackets or different brackets based on what you know, which is something which Munger and Buffett popularly call it as your circle of competence, as to what exactly do you know about this and where can you play to your strengths.
Right.
So that also becomes important when you're assessing any investment. Right. So I mentioned to you about Reliance a few minutes back. In fact, a few years back, the Oberois, like the Oberoi hotels that we know, they had a little bit of a corporate, you can say, there was like a corporate takeover that was happening.
Correct.
And ITC was trying to buy that chain out.
Correct.
And the Oberois actually went to Reliance and said that we want out, right? Reliance ended up buying 20% of Oberoi hotels.
Correct.
Now, for a company like Reliance, why are they buying a hotel, right? That's like the immediate question that you can ask. But what I'm trying to get at is, as an entrepreneur, you will see a lot of opportunities come to you, which are very privy or very unique to you, which may not be, you and I may not be privy to, or someone who's not an entrepreneur will not be privy to. So a lot of times it also gets important whether the risk and return is in favor in that versus, let's say, investing in the stock market, which is like a very plain vanilla product which is accessible to all. So that's also something which entrepreneurs should have a lookout for. Are they getting these opportunities? You could be in the steel business. A certain steel plant is available to you maybe at half the asset price because of X number of reasons. So can you buy it and turn it around, right? These are things which I think will excite entrepreneurs more than plain vanilla stock market investing, right? Because they'll be like, there's no kick coming in here. So that also becomes important, I think.
Thanks for sharing all this, because I think this gives a really good framework and thought process for entrepreneurs to think about how to maximize their ROI. I want to talk to you about now stock market, and since you keep analyzing businesses, what's something hot or new that you're noticing right now that's very interesting from a business learning point of view or a business analyzing point of view that everybody could benefit from?
Sure. So I think for the longest time in India, we've grown up in this country and, based on whatever experience we've had, we've seen there were a lot of leakages that would be there, right? And these are things that even entrepreneurs know about. And what we are seeing right now is that a lot of formalization is happening, right? So think of, let's say, Uber and Ola, for example. 20 years back or 10 years back, who would have thought that a cab driver would probably pay tax, right? So everyone in this country today is paying GST. We as maybe users of Uber will pay. The guy who's making that money, he'll also have a certain deduction before the money goes out. So I think technology is solving formalization in a big way. So we keep talking about the fact that, hey, the economy will formalize, but how will it get formalized? That's the second step. So we are seeing a lot of tech-led formalization happening. So Uber, Ola single-handedly has just formalized the entire cab aggregator market, right? Make My Trip has formalized the entire travel agent market, right? People are getting complied with GST, they are filing their taxes. Zomato at some level has formalized the entire restaurant ecosystem, right? Who would have thought a street side shop who's selling rolls will be paying GST, right? But that's happening.
That's crazy,
because you don't go to a roll shop anymore, you just order it on your app. So at some level that is happening, which basically means, let's say, banking or let's say credit flow is something which will do very well. As an MSME, there's always this concern, or company, MSME basically forms the backbone of India.
Correct.
They have often faced this problem that they don't get access to credit, right? That I think was impossible, or at some level was difficult because there was not enough information. Today we have information, everything is formalized, every transaction, whether you're buying something from a panwala or whether you're buying something at high street luxury retail, you are doing it through a very formal channel, right? Cash is something which you can probably forget about. So in that scenario, I think credit as a business will do well. So banks might do well, NBFCs might do well. On the other side is the aspirational nature, because we are a fairly young country. So even if someone who's probably earning 1/5 of what it takes to buy an iPhone, they'll probably go and buy an iPhone because they are aspirational, right? That's where we are looking at. Now that is only going to happen because of credit. So credit, I think, is going to play a big role in taking our country's growth ahead. So that is a space that I'm quite excited about. I'm also deeply invested in that space. So that's something which I feel.
Some new companies that you look at it in this space, not that you would invest in, but some companies that have come in to play the game. For example, Cred, I think, is a company. Kunal Shah, he's the founder.
Right.
That plays on the finance and the credit aspect of India's growth, right?
Right.
What are some other companies that are?
So again, I am mostly on the public market investing side. So maybe a company like Bajaj Finance is something that I like. Maybe a company like SBI Cards is something that I would want to bet on. Because people still don't use a credit card anymore, but that is growing, right? So it's the second largest credit card company in India, and that is listed. You don't get a pure play credit card company. That I think is a direct play on people consuming online and people spending their money. So the RBI actually shares data on credit card spends. 65% of the swipes or the 65% of transactions that you're doing on credit cards today are happening online. Now, this number was quite startling to me because I thought this number would probably be 15-20%. But this basically shows you that today, India as a country is actually spending money online and in a big way, right? Because if I mean, the credit card spends typically vary between 1 to 1.5 lakhs, half lakh crores a month. So that translates to about 12 to 18 lakh crores a year. Out of that, 60% is happening online. So we are talking about almost 7 to 8 lakh crores of spends online every year. And this is growing at almost 20 to 30%.
Wow.
So that basically gives you some thoughts to ponder on, that this is a great space to be in terms of like credit offtake and all of that. On the other side, there are things that are changing in technology. So we see a lot of talk about AI and chat GPT. Now, at some level, there's only a certain way in which you can analyze this. So, for example, I probably am not at that space yet, but it's interesting to read and see what's happening in that space. So, let's say NVIDIA is something which one can look at, right? Because they're making those chips, and even like the CEO talks about how AI is basically fueling their next level of demand and growth. So that's also something which from time to time will keep happening in terms of changes, and you explore.
Very interesting. I think to end on this note, I think AI is something that nobody can imagine how fast and how quickly we've changed, because I don't think we've, in the known history, changed so quickly and so rapidly ever. So I think it's tough for everybody's brains to wrap around how quickly we're going to change. I was watching a reel by Elon Musk today, and he thinks something called AGI, Artificial General Intelligence, is not that far. It's just 3 to 6 years away, which is really crazy to think about.
So again, I think somewhere one should also not get too carried away, right? Because 2 years back it was that Bitcoin is going to replace the dollar, and everyone was going crazy on crypto. So, and we all know where that stands today, right? Again, I'm not dissing anything, but at the same time, one has to be grounded and know and not get too carried away. Because you will always find something or the other happening. Before crypto, it was about when we were growing up, it was about collecting Pokemon cards. Then, 10 years later, Pokemon Go comes, right? And then again in 2 years, no one is talking about Pokemon Go anymore. So there'll always be these hot takes from time to time. But yeah, one has to also not get too carried away. Is what I would say.
Quite like a fund manager. Because I think that's what fund managers and stock market people do. They see these trends and they also see through them sometimes, and that's why they're able to perform in the long run. The people who perform in the long run are the people who see the trends and also see through them. Will this really stay or will this not stay? And have that composed mindset to know if they should go into it, invest in it or not. But Saket, thank you so much. In the end, do you have any questions or any comments for me?
Yeah, so Naren, based on whatever we've spoken for the last hour or so, what would be your 3 key takeaways from today's conversation?
So my number one key takeaway, which is very interesting, is having an alternate source of income also. To think about that, I think with the word that you shared, VUCA, that's the second takeaway. In such a world, how can we create alternate sources of income? So even somebody like me, traditional family business, FMCG products, but looking at creating content and getting into content creation. So that's something very interesting for me. I think we spoke about Ashwin Grover, right? He founded 2 unicorns, and then now he's judging roadies. I didn't even know about that. Right? So that's crazy, right? And I remember his reel saying कि influencer बन के इतने पैसे कमा रहा मैं कभी सोच ही नहीं सकता था entrepreneur बन के. So that's very interesting to me, right? Thinking about alternate sources of income in a VUCA world. And thirdly, what's really interesting to me is with the fad about AI, to also keep a grounded check. Okay, what things will really change? What things might not change? Will it really change how we eat a sandwich with a ketchup? Will AI change that? Maybe not. So that's an interesting insight for me.
Yeah, kind of like 5 years back, if you had a complaint to be raised, right, for any service deficiency or a product deficiency, you would actually talk to someone. But now it's all chatbots. It's all automated callers. So yes, at some level, technology has enabled that. So maybe people don't have to hire 200 people for a sales team. They can just do it through a software or a chatbot application. So that is a trend which might be there to stay. But yeah, as you mentioned, like having sandwich with your ketchup, maybe AI might not replace that, right? So yeah.
Saket, thank you so much for your time.
Thank you.
And knowledge. Appreciate you being on the show.
Thank you.
Hello and welcome again. I hope you really enjoyed this podcast. If you did, share it with one person that you can help. Jisko isse madad mile. And if you like this podcast, you want such more insightful information and knowledge, check out the other podcasts right here. I will see you very soon in another episode.